Hi, this is Steve Westmark of Counselor Realty. Thanks so much for watching my video blog this week. I'm going to give you a market update of the changes that have been going on in the marketplace with the statistics through the month of June of this past year. What you'll notice first, the first chart I'm going to show you is the pending sales. You'll see that over the last 3 years there's been a continued increase in pending sales. So for instance, in June of 2010 we had 3,125 sales. Last year there was 4,238 sales, and this year 4,917 sales. Now when you balance that out of year to date, it isn't exactly as big as some of the things that have happened, but we are up in sales by over 21% compared to last year at this time. The next chart I want to show you is the chart showing on inventory, and I have two charts on inventory. This first inventory shows where we were in 2010 in inventory at 28,000 properties for sale. Last year we were at 24,000 inventories for sale. This year we're at 17,000. With the increase in the amount of unit sales that are going on and the decrease in the amount of inventory, that is why we're seeing a strong turnaround in the marketplace, and we're seeing this thing turn around and becoming a stronger real estate market and prices beginning to increase. The next chart you can look at more specifically, but the thing that I do want to point out is it shows the inventory of homes for sale, and it shows by price ranges. The price range that's been affected the greatest is the price range under 120,000, where the amount of inventory has dropped by 45%, and the least area that's been affected is the $1 million and above, where it's only dropped by about 10%. So you'll see by understanding the inventory levels where it's more difficult to negotiate on sales. For instance, the people that have homes under 120,000 are getting multiple offers because there's so few on the market, and the ones at the higher ends are not seeing the same kind of things going on in their marketplace. The last chart I want to show you today is the distressed closed rate. And this is a really interesting thing to look at. It shows the traditional sales going back in 2010 and 2011. At this time of the year, we're at about 55 to 57%. This year, we're at 65%. Now, if you balance over the whole year, in 2010 and 2011, 60% of the sales were traditional sales, and 40% were either bank-owned or what is called a short sale. With this large jump, we've seen a 25% decrease in the amount of lender-mediated sales, and I believe by the end of this year you're going to see that the total amount of lender-mediated sales for 2012 is 30%. It's a very positive thing going on in the marketplace. It doesn't mean that you can't find a bank-owned property, but there are less of them, and the same holds true for the short sale. That is what's causing part of our strength in the market and the continued reinforcement of values. Well, thanks for watching my video blog this week, and make it a great day. Bye.